Ladies and gentlemen, good day and welcome to the Midwest Limited Q3 and FY26 earnings call hosted by Go India Advisors. As a reminder, all participant line will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Sana Kapoor from Go India Advisors. Thank you and over to you, ma'am.
Thank you, Danish. Good evening, everyone, and welcome to Midwest Limited's earnings call to discuss Q3 and 9-month FY26 performance. The financial results and investor presentation have been uploaded on the exchanges. I hope you have had the opportunity to review the same. We have on the call Mr. Ram Kollareddy, Promoter, Whole-Time Director and CEO, Mrs. Uma Kollareddy, Promoter and Whole-Time Director, and Mr. Dilip Kumar Chalsani, Chief Financial Officer. We must remind you that the discussion on today's call may include certain forward-looking statements and must be therefore viewed in conjunction with the risks that the company faces. May I now request Mr. Ram Kollareddy to take us through the company's business outlook and financial highlights, subsequent to which we will open the floor for Q&A. Thank you and over to you, sir.
Hello everyone, this is Ram Kollareddy. Thanks for taking time on the call. So, to quick update on last quarter, overall the business vertical of granite was the growth was quite good. The markets are quite supportive. One of the key updates that we are seeing on the granite sector, domestic market is on a very high growth trajectory. The demand is looking very good, more than expected, and I think that will follow through for the next few quarters. And the other factor of China. So China also we are seeing a higher demand because of primarily two factors. On the ground, our distributors are seeing more slight turnaround where the old construction projects which were in problem, the inventory is almost reduced, so there is a new construction which is happening. And also the old projects which are getting finished, they need natural stone as the last part to hand over. So that is, I think, that is also helping. The other aspect is RMB. So RMB is at an all-time strong. It's almost 6.9 compared to 6.3, 6.4 historically. So then the imports also become more attractive for them, and I think overall China is our largest export market, is also looking sound. And so our challenge or our focus was always on the execution and getting the volumes up, because demand was never an issue. But with this strong demand domestically and addition to China, I think we are looking at increasing the production numbers. Another key update related to this, we got a new mine of 10.9 hectare Black Galaxy mine. It's right next to the current operational mine, so there is an ease of operation. We can share a lot of cost infrastructure, and there will be good leverage. And so we have just started production, and we are expecting production numbers as early as this quarter from that specific mine, because it is right next to our current mine and there's less development. The other key takeaway on this mine is the consideration which we are paying to the government of Andhra Pradesh is lower than the current consideration we are paying to APMDC, which means the unit economics work more favorably for this specific Black Galaxy mine. So we are bullish on this project. I think the volumes will come in handy for the increase in demand domestically in China. The other markets are doing okay. I don't see a huge push like these two. Middle East is growing at a single digit phase, and Europe is usually has been no growth, and we see a standard requirement. So our customers are positioning themselves to address this increased demand domestically. Companies which are looking at more export are also looking at more domestic sales now, our customers. And so that is pretty much what happened the last quarter, major developments. There is a new project which we have undertaken in the natural stone business. which is we got a new lease of quartzite mine, and this is to supplement the quartzite stone coming from Brazil into India today. It's a premium stone, and this is a one-off in the state of Andhra Pradesh, and we are trying to we are building it into a business model B2B2C, where we hold the brand, we have exclusive mining rights, and we use this product to position in the market. We have a job working partner who will convert this into different products, styles, any form, any shape and form. And then we actually have our own dealers nationwide distributing this product. So wherein we are also controlling the end price, and we're going asset light in positioning this product to the Indian market. So this is something we are building on in the next few quarters. I think in next 9 to 12 months we will know how this is panning out, and if it is panning out well, we will go aggressive on this model. It's a grey quartzite, which is a unique material, unique like your absolute black and black galaxy. Unlike black and black galaxy, where there are other miners also, this quartzite we will be the only company doing it pretty much. So may have some more advantage if we're positioning it right. So these are the primary updates on natural stone. We can move on to the, I think Dilip will take over the numbers at the end of my commentary presentation. So the other important update that we have in natural stone is we have, as we updated in the previous meetings, I think we are very proactive and bullish on converting fossil fuel driven machinery and trucks, specifically trucks, into EVs. In fact, we allocated a considerable portion of the proceeds from IPO in converting trucks to from diesel trucks to electric trucks. We are currently having 9, and this we have started placing orders and planning out to purchase the rest of them, and I think we'll complete that as early as next 1 or 2 quarters, wherein the cost is coming down quite considerably because we set the asset. The other important development is, apart from the trucks, our constant drive is to convert other machines also. So we have also, last quarter we did a lot of work in looking at other machine options, especially excavators. After trucks, excavators consume the maximum diesel for us, and we have already found a partner, and we are prototyping the first electric excavator in the mine as early as this quarter itself. And if that goes well, I think next few quarters we'll be able to roll over and convert the diesel excavators also into the electric excavators. And I think we have planned a certain capacity of solar power, captive solar power. We'll be exceeding that given all these developments. In the next financial year, we'll be going more aggressive, and the exact number of megawatts we'll be able to tell on next call, but we'll be going more aggressive on the captive solar to address these, to further cut down the cost on these investments. The second vertical of quartz. So we have faced few challenges in the last quarter, and we have tested the product. We have sent the product to all the prospective customers. We have got approvals. We have sent bulk samples. We have got approvals. We got orders. We have faced challenge in the streamlining of the solar integration part of solar and the internet stone. That was the problem last quarter, but we have solved those issues. Most of the issues are ironed out. We are good to go, and we have started the commercial production as we speak. And then I think we will try to make up as much, but I think next year we are looking at doing good volumes beyond what we planned, because of the small changes that we have made in order to streamlined the plant over the last quarter, we were also able to increase the output a bit. So we'll try to make up for those volumes. We have already started the work on phase 2. We have not delayed that part because of the challenges we faced last quarter. So we already started the work on phase 2. We already finished the layout. We'll be starting to place the orders next month. I think we are in line to commission the phase 2 also maybe by Q3, end of Q3 or early Q4 next year. So that is also something is exciting, and we were waiting for the product testing, certification, and approval from customers to look at the volumes on the solar glass side. So now once that is through, we have more clarity on what could be the volumes that we can position to the solar glass market. And the other development in the last week is the tariffs. So we were never directly impacted by tariffs from US, but our customers, some of our customers were selling product to US. I think with the tariffs they get a relief, and I think we could see good tailwind and that would help the phase 2 in a bigger way than the phase 1, because phase 1 more or less the product positioning was done. I think phase 2 the tariff thing will help. I think the tariff with the EU also will help this business segment, primarily because EU as a cluster is the largest manufacturer of engineered stone after India and Vietnam. Considering that the EU usually buys from domestically within EU manufactured products, I think now with the free trade, I think India will also be in a good position to supply EU, which was earlier a smaller market for our customers. So and the other aspect is our plan was to do the HPQ in phase 3, and we concluded the plan and layout and the machinery for HPQ, high purity quartz, in phase 2 itself on a small scale, and then we want to ramp it up in phase 3. So that is a development which we have taken up for phase 2. So that is another change that we have made to our plan in phase 2. So quartz market is looking good. With a lot of positive developments, and we initially with the tariffs we were looking at positioning more product export. I think that still exists. We will be exporting the product because even now there is good growth of requirement coming from European and Vietnam, Southeast Asian manufacturers. But I think in terms of price parity, the arbitrage might not be there much between domestic and export, unlike when the tariffs were existing. But that's fine. I think overall it's looking healthy and more stable at a global level. So that is where we are on quartz. And in terms of the HMS, so Sri Lanka, where our HMS concessions are, they have they have started the working on new mining policy, which is more transparent and industry friendly, and they have started excise in December, and they have got cabinet approval and already cabinet approval a few weeks back. So there is a bit of a pause, and for starting our work there due to that, and we are also awaiting the new concessions from the ministry, which is in advanced stage. So hopefully in this quarter itself, both of them would be resolved, and we can move forward on the ground. So there we have increased the volumes. We are planning to build a slightly larger plant, about 150,000 tons output. And once we get the new concessions, I think we'll be exploring that over the next 2 quarters and starting the work on that in Q3 of next year on the sizing of the plant for that. So Sri Lanka is looking good, and overall we are comfortable in the country, and things are moving in the right direction in more transparent manner. And the government is looking for serious players, unlike before. And I think we have done the maximum work as we speak, as far as we know in the country, in terms of proving resources and progressing on the ground, including environmental work. The other aspect in this sector is the government of India has announced the PLI scheme to make permanent magnets, and initially our plan was to stick to oxides, and we are studying whether once the PLI scheme comes, we will be looking at this aspect, whether it suits us to go forward integration and look at this. But I think that clarity will come during next quarter. The other aspect of in HMS, we have formed a company in Sierra Leone, and we are looking at some concessions there, which are available on sanction based on technical capability. We are pursuing this opportunity, and we will be in the next in the next few weeks. We will be looking at. Our team was there; they did a lot of work and did a lot of exploration. It's a similar setup, a large resource of HMS with a monazite byproduct. And if something comes through there, we will keep you posted. And right now we're just scouting in Sierra Leone. Nothing of if something concrete comes up, we will update you. So these are the updates on these three verticals, and Dilip will speak a bit about the numbers.
Yeah, good evening. Welcome to the earnings call for Q3 of Midwest. We will speak about the numbers that we have achieved in the current quarter, as well as the numbers for the last 9 months. For the current quarter, the revenue which we have posted, consolidated revenue, it's about 128 crore. Against this corresponding year-on-year number of 117 crore last year Q3. So there's a growth to the tune of 10%. And if we look at EBITDA, EBITDA levels are year to date, the numbers are more or less the same numbers compared to the last financial year. But compared to the last financial year 9 months, there's a little improvement in the EBITDA from 24.53% to the 27%. The current quarter as a standalone number of EBITDA is around 23.7%. Against its comparative number of the last financial year, the corresponding quarter, 20%. The PBT levels are around 22%, and the PAT level is around 16.6%. This is on the P&L part. Using the funds that we have raised in the fresh issue, we have repaid the loans to the tune of 54 crore, and with that our gearing ratio got improved. And we are in the process of application of our funds. As Ram mentioned, there is no EV dump trucks which we are going to apply these funds. Invest these funds will further help us to improve the numbers. And there's no phase 2 plant and the HPQ in terms of costs. We are taking that together. By phase 2, EPQ also will be ready. Yeah, that's it on the numbers side. Any questions, I'm happy to answer.
Thank you so much, sir. Ladies and gentlemen, we'll begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question comes from the line of Akhilesh from MK Global.
So my first question is on the more timelines of the rare earth initiatives which you guys are taking on. So has there been any kind of progress in the timelines or something? If you can elaborate more on those fronts.
So timelines in terms of quarter on quarter, pretty much in Sri Lanka, we are where we were because of the government policy coming into place. They took some time for processing most of the work on the ground. So Sri Lanka, no, but I think we are very close to accelerating the whole thing because the cabinet is approving the process and the delay because beyond our control is done. So we should be progressing on the ground faster now. And
so will there be any final delays given the timelines which you had mentioned earlier, like within 15-20 months? So is there this kind of 3 months of delay in whatever you are seeing in the market? So will that be extending our 20 months target of commissioning?
So our initial plan was to start the activity on the ground in end of March and April, and we are in mid of February now. So giving another few weeks to this, I think there could be delay of a month or two, but beyond that we don't see. But we can. Our plan is to make up as much time because the EPC contractor will be from China mostly, and given that, I think we can make up in the execution. But otherwise, if you look at apple to apple, I think there is a month to 2 month delay.
Okay. And secondly, like you mentioned that in the union budget there has been announcement around the rare earth magnets. So how do you see this impacting your plans? Do you expect any PLI support or any fiscal benefits like capex subsidy, tax incentive or anything of that sort?
So first major impact for us is going to be that we know that there will be a great demand for oxides domestically because the PLI scheme is for 5 companies for 6,000 tons of permanent magnets, and 6,000 tons of permanent magnets will need around 3,000 tons of oxides. So today India's oxide production of IRL is close to 500 tons, which means just the PLI units need about 6 to 7 times of entire India's production. So which means that today, even if I'm producing the oxide, the demand is overseas, not domestically. So that is very positive for me. Whether I'm producing oxide in Sri Lanka or I'm producing oxide in India, then the demand is within India. So that is first positive thing. And we believe that PLI will be certain set of companies, but there will be other companies also which will come after that. So that is the direct thing. So PLI is for magnet production, which means somebody takes the oxides from, let's say, 2 years from now, once they're ready from IRL or from us, and they make a magnet. So that is the support what government is giving, and it's typically translating to around 12 to 15% of OPEX subsidy and one-time capex subsidy of 15%. So it is a decent amount. So today, where there is no domestic market, where there are no magnet manufacturers, this is a huge boost, and it will give a big trigger to entire ecosystem. Specifically, as from oxide point of view, where you have a customer within the country closer to us, and second, the scope of the PLI scheme itself, which we will have to evaluate once it actually comes on paper.
Right. And how do you see this impacting your pace of pace or scale of investments, or where you put your investments in? So will there be any kind of strategy changes around that because of this coming in now?
No, PLI point of view, from to make oxides our core business, monazite to rare earth oxides, no, because we have built our business based on our reserve base and based on what we can do with within our own concessions with our material. So the only thing in terms of and we want to initially do 150,000 tons as phase 1 because that's the first phase and we want to get it right. And after that, we can easily ramp up doubling or tripling. That is something we can always look at. But from a numbers point of view or from strategy point of view, core strategy, no, not much change. But we will be seeing a lot of activity in India to convert monazite to oxides, existing feedstocks, like the recent Kerala, what they've come with EOI. Other states also may come. So there will be very aggressive and opportunity to look at it and participate in every tender or EOI and then try to take more of the processing capacity so that within India also we have ability to supply oxides to these magnet manufacturers.
Okay, thanks. That answers my questions. Yeah, thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may press star and 1 on the touchtone telephone. Reminder, you can press star and 1 on the touchtone telephone in order to ask a question. Our next question comes from the line of Dipesh Sacheti from Manya Finance. Please go ahead.
Yeah, hi. Am I audible?
Yes.
Yes, sir, you are.
Okay. Can you shed some light on how the dedicated rare earth corridor mentioned in the budget will help Midwest?
Yes. So it's an ecosystem play. It's very tightly knit industry. So if you look at what India has, we have feedstock of monazite. If you look at the value chain, monazite is a ore. It's a mixed ore, which has unwanted materials which you have to remove and refine the rare earth into oxide form. So it is somebody takes the monazite, so we take the monazite. Then we use it's a chemical electromagnetic. There's a long process chain, solid extraction, and then we extract the rare earth oxides. So the contained rare earth oxides in monazite can be as low as 15%, can be as high as 30%. Once you make those oxides are then made into a metal form through special electrolyzing process. And then that metal is made into alloy based on which industry it's being used and the form factor and the magnetic properties that are required. And that alloy is made into a magnet, and that block of magnet is fabricated based on where you're using it. Automobile will have two-wheeler have different form factor, different fabrication. Your iPhones, your iPods will have a small form factor. So that's the fabrication process. Cutting, polishing, things like that. So given this, it's a long chain. So rare earth corridor per se is what perfectly works. Wherein in that corridor, you have oxide producer, you have a metal maker, you have a alloy maker, you have a block maker, you have a magnet manufacturer, you can have a motor manufacturer, you can have EV manufacturer also. But let's end with motor for now for this discussion purpose. It's a long value chain. It's a very tight-knit industry because the motor manufacturer will give the specifications required, detailed specifications required to the magnet manufacturer. The magnet manufacturer back works with all the raw material supply chain and then does the required work and gives. Now the magnet manufacturer supplier, who is an alloy, again has his own supply chain. So globally, if you look at the industry in China, it has built in this system wherein there is an ecosystem there and each one helps. There is no lag in communication. Everyone works together and gets the product right. So I think that it helps. It's a great help, and it also we have to understand some of these processes are environmentally quite dirty, and they will need large-scale recycling of water, recycling of air. There's gases, including recycling of magnets, which can go back to the loop within that ecosystem. So I think all that is also going to help where this ecosystem or this large infrastructure can have common facilities, including testing facilities, which are quite expensive. So I think it is a very good move. In fact, India will need a few of this, not one. And each state ideally wants one facility in each state where the resources are. One in Kerala, one in Andhra, one in Orissa, one in Tamil Nadu, where the local industry develops. And we don't want to move you don't want to move the monazite on a long distance also. You want to create the local industry there, because let us also remember that all this monazite has thorium in it, and which is also a great advantage for the country, because we may run our entire energy on thorium next 10 years, right? So given that these hubs 4 or 5 will be of great help, and we will be part of these hubs wherever we are producing oxides, we will have presence in all these hubs and support the downstream industries in these hubs. So ideally, we will be very active in this ecosystem.
Right. And how much of your IPO proceeds have been utilized so far? And what is the planned timeline of deploying the other funds?
Yeah. We have raised 250 crore, and out of that 250 crore, approximately 225 crore is meant for other than IPO, the expenses leaving aside. Close to 225 crore is the number that we have to spend. Approximately 10 crore is what we have catered for general corporate purposes, and remaining is around 54 crores we have earmarked for repayment of loans, which we have already done, and the balance amount is to be spent. So we have started applying the funds on phase 2 quad plant. So we'll be releasing orders and placing advances on the vendors. And the EV dump trucks is another major amount to be spent. That's about 27 crore. So these two, I think estimated timeline, what we have hinted is this fiscal and the next fiscal. Maybe a quarter here and there, the amount will be spent.
And how much long-term borrowings are you going to reduce? I missed that figure.
54 crores.
54 crores. Okay.
Yeah.
Right now it's about 164 crores is the long-term borrowing. Is that okay? Is that the right number?
Correct.
Right. And now going ahead, what is the order pipeline segment-wise, if you can give me for FY27?
So, in terms of natural stone, we have distributors who are taking material from us for the last 20-25 years, and usually the way it works is there is some of them have a deposit, and then they offtake whatever we are producing. So the bottleneck for us has been always the increase in production, so we don't specifically maintain a kind of order book the way we run it. In terms of quads, we have enough demand for the whole year from both the engineered stone plants. Typically, we are looking at 7 companies for engineered stone. And solar glass, single customer, the first customer is off-taking the entire material. We are trying to, in the next, for Q1 of next year, we are also looking at adding a second second player there. Interestingly, we also have orders for the tailings, you can call, or the remnants of the material from other companies, glass manufacturers like AGI and all. So I think we'll more or less full for the next year, and in terms of product positioning, and we will be looking at phase 2 maybe in Q3 Q4 this year, how we want to position that. And for exports specifically, we have not confirmed any orders. There are requirements, there are alloys, and there's requirements. But exports is something we will aggressively start working on next quarter once we meet the demand domestically, where some of the customers have been waiting for some time for material from us.
And what is the ideal EBITDA margin which you are targeting overall? Because we've seen ups and downs from 20 to 29 and even now 23. So what is the EBITDA margin and the ROE which you are targeting?
The EBITDA margins have been consistent since last 3-4 years. If you look at, gradually it's only upward trend except the financial year 23. 23 there was specific reason that's due to post-COVID issues. There is no port-related logistics issue which has caused revenue drop, and the respective numbers also got dropped. That's the one concerning. Except that exceptional issue, the EBITDA numbers were growing year on year. Maybe a small number, but it's growing. It is consistently being in the increasing trend.
If you can just put a number to it, what is the EBITDA margin which you think will be comfortably you'll be able to settle that?
So last year we did about 28 less.
Mm-hmm.
Yeah, 9 months we said as well.
This year 9 months we did about 27%, and the last quarter normally our revenue number will be little high, and that's now overall the number will be more or less close to the last year number.
Okay.
So in the specific numbers, I think once you see a full year of quads and then HMS, I think we're looking at it to be the healthier side than these numbers.
Okay. So what is the right way you want the analysts to see the company? Is it quarter on quarter would be a fair assessment, or year on year would be a fair assessment?
So I think year on year is fair assessment because we have a lot of new projects coming in, and each one has its own timeline and traction. So I think at least for the next 3 to 4 years, year on year, once these businesses mature, and then you have a phase 2 also odds done, and our HMS starting production at least phase 1. I think from then on you should look at half year, or quarter. Till then, I think we should look at on a yearly basis until all of these get mature.
Okay. And what is the cost of debt right now?
Yeah, it's around 8%.
8%. Okay.
Yes.
Fine. And is there any capex which is lined up for the next 2 years?
Yeah, one capex is quad phase 2. That is anyway we have raised in the fresh issue. We need to just apply those funds. Apart from that, regular replacements in the mining segment will be there. So that's capex, which is a routine process. HMS too. HMS will be close to 150 to 160 crore. That will be funded mostly from the accruals, internal accruals.
Okay. This is for the next 2 years, right?
Yes.
Great. All the best, guys. Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management will be able to address all the questions from the participants, we kindly request you to limit your questions to 2 questions per participant. If you have a follow-up question, please rejoin the queue. Our next question comes from the line of Naman Parmar from Nivashaya Investment. Please go ahead.
Thank you so much for the opportunity. So firstly, I wanted to understand that on the HMS side that you have done get a phone license in the Sri Lanka, right? So you have done any tie-up with any Australian mining company, or you will be directly going to mine the Sri Lankan field for the HMS? And also any update on the South African side that you have done the tie-up also there? And how big could be the estimate of the rare earth part could be after 2-3 years down the line?
In Sri Lanka, there is no need for a tie-up. Like we mentioned in the past, there are EPC contractors who will come and separate the mineral out of the heavy mineral sands deposits. So this is not this is a well-known technology. And Sri Lanka, they'll give Chinese visas also very easily. So the idea is to have a whole EPC contractor come in and quickly implement the project within 9 months.
Okay, understood. And how much could be the estimate or a rare earth part could be 2-3 years down the line could be contributing to your revenue?
Yeah. So for the HMS, we are looking at a phase 1 capacity of 150,000 tons. And this is HMS is a mix of your ilmenite, rutile, zircon products once you separate them. And as you go, I think the prices are changing on quarter to quarter. But as you go on current prices, I think the weighted average if you apply, Sri Lanka will contribute to around 350 to 400 crores of top line in phase one, and then we expand from there on to phase two, which could which we don't know right now what that production increase would be. And then there is also the monazite. We have not factored any cost because we want to make the oxides there. And that will add another 150-180 crores once we start making oxide. So Sri Lanka can contribute anywhere between 350 to 600 crores realistically with these concessions that we have over the phase one and the further validation into the oxides. And to give you a perspective, 150,000 tons per year. And so the reserves that we are having there are close to 3.5 million plus. So we have a good runway of 20-25 years on this alone. But the idea is to accelerate, increase the production, and once we get the other concessions also that we're expecting, then we'll be able to even double or triple the productivity. So that's the plan in Sri Lanka.
Okay, understood. Secondly, on the whole process side, like you mentioned that you are currently in the oxide side, right? In the rare earth material. But from oxide to coal alloy to magnet, how much big CapEx would be required for any person to enter into forward integration plant? And if you have any plan to enter in future, like currently you have mentioned that you will be providing till the oxide part, right? But if you have any plans in the forward, then how big will the CapEx?
So for somebody to make a oxide to magnet, our internal study numbers show that at a capacity of 1,200 tons per year, which is basically what the government PLA has mentioned, the capex will be anywhere around 1,000 to 1,100 crores. That will be capex of plant machinery, including without the land, let's say approximately. And so out of which the subsidy of government of India is close to 150 crores. And now this 1,200 crore investment, today the magnets from China which are being imported, they're imported at a cost of $60 to $70 a kg, just to give an idea. So you can we can multiply that number of $60 to $70 a kg and you get a revenue number. Now the key is setting up the oxide to magnet plant is possible, and it has its own challenges, technical challenges, but it is possible. The oxide becomes the key, and that's where our focus is. Now, on the second question on our interest, it's a forward integration for us. We will look at the policy, the PLI policy in detail, what comes and where it stands. And if it is advantageous to us and we feel that we'll be able to leverage and have a good forward integration project for our oxides, I think we will look at it and decide at that point of time.
Okay, understood. And lastly, I wanted to understand on the specifically on the cost side that you have mentioned your capacity after phase 2 would be 6 lakh ton, right? So overall, if we see the demand for the cost grade, the powder would be around 37-48 lakh ton, right? But any clients you have been able to track on the semiconductor side, like you have mentioned on the solar side, you are able to track, and like you have also mentioned on glass processing also you have API like players have track. Any player you have track on the semiconductor side and see how the demand will be going to float in the cost grade side, how big is the import on the particular powder, because in India I don't think there will be a large player on that side. You will be the only one getting the 6 lakh ton capacity.
So the aspiration of the company has been to go for higher value addition on quartz, and that is why you see that our baseline itself we put engineered stone and then we're going to solar within the system. So next, if you look at our presentation and also what I mentioned, HPP high purity quartz is something which starts at 99.9 purity. So we have done a lot of work on that, and as mentioned, I think in phase 2 you'll be seeing some production coming from that. Now the application of HPP is very varied. It's not semiconductor. So the requirements of what qualifies as 99.9 plus requirement, you have your as basic as your optical glass, the camera lens the phone cameras are made of. Then it is also your high quality screens which are coming on the face of the phones for better clarity. That's the baseline. Then it goes to your solar crucibles. It goes to your semiconductor crucibles. Then it goes 99.94959. So as and when you are getting a step higher in quality, the capability and you're in on top of the pyramid. We're investing in this company to our capability. So I think yes, semiconductor grade we will be addressing that market, and that was always our plan. The timelines are looking good, and capability wise also I think we are having comfort, and I think next year you will see us progressing into those materials, luckily the raw material feed also is in India. We don't have to import the basic raw quartz. With the quartz, with the few of the quartz available in India, we'll be able to make these materials.
Okay, yeah, understood. Thank you so much.
Thank you. Ladies and gentlemen, anyone who wishes to ask a question may press star and 1 on their touchtone telephone. Reminder, you can press star and 1 in order to ask a question on your touchtone phone. The next question comes from the line of Rishabh from RBSA Investment Manager. Please go ahead.
Yeah, hi, thank you for the opportunity. My question is slightly long term. I'm just looking at the Midwest at 2030, and whatever base volumes you will be doing across all the 3 verticals, that is the granite, quartz and HMS, would it still be possible to grow at double-digit volume growth even after 2030, for the next few years after that? I just want to get understanding on the time that we have across all the 3 verticals.
As a company, absolutely yes, because we are having these new verticals getting added, and they're going to give us those attainments if you look at a 4-5 year spectrum. And each of these verticals has their own capacity build-up and also the quality build-up of the business. So if you look at the quartz, you're starting at phase 1, then you have phase 2 to go, so volumes increase. Then we're looking at the higher value products also. So both of them will leverage each other, and I think we have good runway there. And globally, if you look at the largest quartz company as we speak, right, silica company in the world, you can look at the Sibelco, and they produce. They have also extended into recycling. We are not looking at recycling in the next 4-5 years anyway. So recycling glass. So I think we are starting at a very low base, so we have good runway to go. And in HMS and the rare earth space, I mean it's a wide open world, right? So we are your HMS to start with 4 concessions in Sri Lanka. Then we expect another a few more. We increase the volume there from 0 to 400, maybe doubling that in next 4-5 years. Then you have the monazite play, monazite to oxide. That is something that we see the world needing for sure for the next few decades. And more importantly, the supply chain away from the current supply chain. So I think that is going to be the other tailwind. And so yes, if you ask me, we are very comfortable in, if you're asking on double digits, yes, I think Uma will add something to that.
I mean, to give an overarching idea, the industries that we've chosen, whether it's quartz for high value industries like the semiconductor, the solar and all that we've chosen, or the sectors, or even heavy mineral sands, these sectors, cater to the EV industry and to the, medical devices, defense, and all these that are servicing the customer base, which is extremely strong. And these are learnings from the past, where we choose sectors that have, really good growth, top line, bottom line, and the gap between the demand and the supply is massive. And as you have just mentioned, even for the PLI of 6,000 ton magnets, we need at least 2,000 to 500 ton oxides, and then production is 500 currently in our country. So that's the kind of gaps we try to address, and not just the gaps in India. There are supply chain self-sufficiency of supply chain from even in the US and several countries other than China. So when you're looking at China Plus One strategy, people are even in the US, they are even giving 2x the pricing than the listed Chinese exchange price, which means there is not just an uptick in the possible volume growth. There is also a massive upside on the price growth eventually, and then because it's our strength to add the resources and the separation of these resources and to cater to these raw materials, we're using our strength to go all across, not just Sri Lanka. We'll be stopping other places also to keep adding to the resource base. We're very strong on following this particular strategy and not wavering from it.
Okay, that was very helpful. And just to follow up to that, you mentioned that strategically source sectors which are sunrise sectors and high growth, and also couple that you want to move the value chain. So in terms of mapping our capabilities and hiring say senior personnel, how are we placed in that in that lens, so that we don't falter when currently we're having a lot of tailwinds with us?
Yes. So like you rightly pointed out, hiring and bolstering the team with technical capabilities outside China has been the challenge. But we are constantly focused on this front, and we've bolstered the team from Linus and some other competitions from Iluka and others constantly, and other cost companies also we've been adding. Listing has helped for that, because we now have the visibility and the comfort for people to join in. And also within China also there will be people originally from India who would like to move back to India. This is an opportunity for them to come back home. So there are a lot of ideas that we are working with to bolster the team, and this is where quite a lot of effort is going in.
What about interview structure for the top management? Would it be giving ESOP or something, or how does it work? So that they don't just with the company and.
Yes, we are planning that. We hired a consultant and we are devising the ESOP scheme.
So to just give an update, strengthening this case is we just have Srinivas, who is joined as a business head for Quartz, and he's been heading Sibelco operations for the last many years. So I think Sibelco is a global company. So I think we are seeing a lot of traction there, and that is something we personally spend a lot of time in building these teams.
Okay. Thank you. Just the last question, if you have a chance, on broadly, whatever strategy you're saying, whatever you're doing, everything looks good on paper. So, but is there any challenge or risk that you see, or maybe one thing that keeps you awake at night, both of you? Anything that you can share?
So what keeps us awake in the night is, I think, we are trying to do things that have not been done by many companies, right, outside certain geography. So a lot of these flow sheets, the plans, the architecture, and though it comes a lot of know-how and experience from people from the industry who run these plants, they become redundant very fast in terms of technological change, right? So you never know, you're slightly blindsided on what's happening on the other side of the world. So you want to build a state-of-the-art plant, you want to be right at there, you want to have the best efficiencies in the world. They're good for you, but are they there? So that is a constant thing we keep thinking and trying to chase. We hear ideas, somebody's talking about something, what is fact in it, so a lot of noise around it. So getting over that noise and clearing that noise and trying to see what suits us very well. I'll give you an example, right? So now we're talking about making monazite oxide. So monazite oxide, obviously China has the best technology, they have the best scale, and they're doing for last decades. So obviously their efficiency are 95 to 96%, which means for the contained oxide rare earths in a monazite, they're able to capture 95 to 96%. Now, that is something that we know, and a lot of literature, and we know from the industry that's the number. Now, on our test work, on our lab, on our pilots, we did not cross, frankly, 86 to 87. But still, we make money, the yield is good enough, and that is something best of the class outside China. Now, obviously, due to these the geopolitical situation in the last 1 year, you are looking at double the price, 50% higher price, so everything is feasible. 70% is feasible, 80% is feasible, even 65% is feasible. But as a CEO, as a management, we want world class. We want to be there at 90s. How do we get there? So I think that is the strive that we find it challenging, and we see, okay, these guys are better. We will be doing better in the next decade because of this issue, but otherwise, where do we stand, kind of a thing. I think those are the challenges. But I think it's a good challenge to have and to the team, and we are trying to learn a lot. We are trying to, in fact, look at new things where we can do slightly different. So we spend a lot of money on R&D as well. So I think it's a good challenge to have, but it will always be there. I feel for the next 4 or 5 years, there is no one solution to it. And if they're able to inculcate the same culture into the team where they're also restless and thinking about all these things daily, I think we would have done our job.
Yeah, thank you for the detailed response. Thank you, and wish you all the best.
Thank you.
Thank you. Ladies and gentlemen, anyone who wishes to ask a question may press star and one on their touchtone telephone. Reminder, you can press star and one on your touchtone telephone in order to ask a question. Our next question comes from the line of Arvind from Equiventure Capital Advisors. Please go ahead.
Hi, am I audible?
Yes, sir, you are.
Okay. First of all, very good evening and congratulations on the results. Secondly, sir, I would like to have some clarity with regards to the pilot project that letter of interest which was received from KMML. Where do we stand on that as on date, sir?
Yeah, so KMML, we have an LOI and we are progressing on discussion with them. I think there is to and fro happening, and we will be getting some clarity over the next few weeks and have an update with you in next few weeks where we are on that. But it is something that they are also wanting to do, but there is some delay on their side on executing it, and I think we'll have an update in 2 weeks.
Okay, and how much revenue contribution can we expect Quartz to make once the phase 1, phase 2 and HPQ, all the 3 plants are up? What would be the revenue contribution, sir?
So Quartz phase 1, it will be around 200 crore plus, around 200, 210. The phase 2 will be similar number. Let's say phase 1, phase 2 for engineered stone and solar glass will be around 400 or 400 for plus or minus, you can take 5-10%. Then the HPQ per se, the initial plan that we're building in is close to around 20-25,000 tons. We will be getting more details shortly. But overall, you can look at the total size of this phase 1, phase 2 HPQ close to around 500 to 550 would be the tentative range on the top line.
So that would be exceeding around 40%, right?
Of the overall revenue of the company?
Of the overall, yeah. Oh, yes, okay.
Yes.
Okay. And last question, sir. Are we planning to plan any project in Sierra Leone since we have acquired the subsidiary over there? We have set up the subsidiary. So any site in picture in the near future, probably in next 2 years' time?
Yes, so that is the idea, and Sierra Leone is transformed. So the world's largest rutile mine is there, and there's a byproduct monazite there. And we were looking at low entry, wherein we don't spend upfront lot of money in acquiring mines. Like Sri Lanka, we go in, we use our technical skills, identify the mines, develop those, and then try to evolve so that even if a few of them don't come through, we are not stuck with large capital blocks. That's the whole idea. And this is the terrain where we felt that there is a scope. We did a lot of scouting, and yes, the idea is to have some own mines in Sierra Leone with SA and HMS projects, and then set up another attraction with Sierra Leone. From Sierra Leone, you can also just set up a concentrate plant and get the concentrate, unlike we don't need to actually do a separation plant. It's feasible there. So I think, yes, in the next 2 years, we are looking at a good possibility of asset there.
Okay. Thank you so much, sir. Thank you for the clarity. I wish you nothing but the best, and let's see how the next quarter turns out to be. Thank you, sir.
Thank you.
Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I would like to hand the conference over to the management for the closing comments. Thank you, and over to you, team.
Thank you everyone for participating in the call and wishing us well. And hopefully all of you will participate in the next call as well. Thank you so much for your time.
Thank you, sir. Ladies and gentlemen, on behalf of Go India Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your line.